Welcome to the Multifamily Investor Nation podcast. I'm your host, Dan Hanford with PassiveInvesting.com. With us today is our special guest, Malai, Annamalai. Welcome to the podcast.
Thanks, Dan. Fantastic to be here. I'm looking forward to talking to you about this property and getting some more, viewers and talking to some of more investors, I guess.
Awesome. Well, before we dive into this deal we're going to talk about, which is a 34-unit property called 808 South Center Apartments out of Dallas, Texas. You acquired it earlier this year in January of 2022. Before we dive into that acquisition, tell us a little bit about yourself and your background and kind of where you are right now in the multifamily space.
So multifamily was something that I've always wanted to get involved with. Real estate is something that I've always done. I have a portfolio of single family homes and I do hard money loans. I do second non-performing notes and all that stuff. Anytime I think about multifamily, it just seems like so much to do and so much to learn. And it's always just, where do you start? I guess that's where I was always confused. It was always never the priority. And I full-time, I actually have an IT staffing company that I run. So that's been kind of busy for the last 5-6 years. Things have been taking off with that IT company. So I've been focusing on that. So primarily my job day to day is, meet with the clients, take clients out to lunch, dinner, stuff like that. And when COVID hit, everything came to a screeching halt, meaning I had a lot of time that I didn't know what to do. So I figured, okay, maybe this is the time that I would look at multifamily because that's something that I've always wanted to do. So I jumped with both feet in. I think for like 5 months or 6 months, I consumed so much content. It's not even funny. I signed up for your MFI in Summit, Old Capital Summit. There was like a bunch of things that I did that I was just trying to get involved and understand, to learn and all that stuff. I thought maybe I should just take a course. Then I figured, okay, I'm smart enough to pick things up. So anyway, so that's how I got started. And then I signed up for financial modeling classes, and because I know I'm pretty good in building relationship and gaining trust and stuff like that. That's how I've built this IT company. So I figured I could, I know how to build relationship, and I'm doing single family homes, and I'm doing notes, I'm doing hard money. How different can multifamily be? It's just the next logical step. Boy, was I wrong, man. Everything was just so different. Every step of the way was so unique and so different. So anyway, so that's how I got started in multifamily. And what we did is, or first I thought, okay, syndication is so easy. Everybody was talking about syndication because all of these conferences and forums that I went to, everybody was talking about syndication and how to be a syndicator. I thought, oh, this is not that hard. I figured, okay. So then I thought, okay, how do I get to syndication? I thought, okay, I'll invest in 10 or 15 deals as LPs and acquire a couple of deals myself, run it, and then I'll be master of both. I'll know how to report because I've been in 10 or 15 deals and I've run my own deals. I would know how to run the deals. So then I could get investors and show that I've done it. And I've also invested my money and have them invest in me. So that was the goal. That was the plan to get started.
Yeah, it's awesome to kind of see that current transition, kind of getting from the full-time IT staffing company to what you're doing now. Now, is the IT staffing company still operational?
It's funny that you asked that. So before COVID, I really thought that I was the key to the company because I started it. I did everything from billing to recruiting to client relationship. And then as the company grew, we had people, but I was still completely involved day to day in every bit of the way because I'm so like detail oriented or micromanaging, honestly. So after COVID hit, everybody was starting to work remote and everybody was doing things on their own. And the more I stepped back, the company was growing better.
It's nice how that works that way, isn't it?
It's crazy. I mean, you think you're so important, but then you realize, well, you're not that important. As long as I have control and I manage the managers, it was kind of tough for me because I always wanted control of everything that I've been doing. And so, yeah, I mean, it's still operational. So I have people doing it and I'm still involved about an hour or two a day, but I'm not as important as I thought I was.
Well, that's good. That's good when it works out in your favor that way, though.
Right. Yeah.
Well, let's without further ado dive into this particular acquisition called 808 South Center Apartments, located in Dallas, Texas, 34 units. Talk to us about from the very beginning when you first heard about this deal. How did you find out about it from the very beginning?
So this was actually a marketed deal by Marcus and Millichap in DFW. So we had relations. So when I went to Old Capital Conference, I met a bunch of brokers, and by then we actually had 83 units already under our belt from New Mexico. So we spoke to the lenders, Old Capital, and told them this is what we did. We'd like to acquire some units in Dallas. So we showed the PFS and all that stuff, and they thought we were legit and we had funds to buy this deal. So it was in the peak of competition. Everybody was competing, and we were in best and final two. We didn't want to just keep going up and up and up. So we just leveraged our relationship. The brokers trusted us. Obviously, broker works for the seller. At the end of the day, they want to get the best price for the seller. But the broker put in a word for us that we could close, even though we're not the highest, we could close. And the brokers and the lenders word also kind of helped us, because if lender says, okay, I've seen their PFS, they can close. So that also helped. So that's how we got the deal. It was just a marketed deal from Marcus and Millichap.
So what was the final agreed upon purchase price on this one?
It was 2.8.
2.8 million. And I want to go back to something that you said that the broker had mentioned, right? Because you said you had gone to a few conferences, went to the Old Capital Conference, saw and you got to meet with some of the brokers. How did you build trust with the brokers to a point where they could basically vouch for you in front of a seller and say, hey, I know these guys can close? Because at this point, how many deals did you had closed at this point?
Just one, just the 83 units in Albuquerque.
So just one deal prior to that. So this is kind of your second deal. So how are you able to build that confidence and build that trust with that broker to that point?
So I think I'm pretty good in gaining, trust and building relationship. The people that I talk to, because it's not it's the same thing in the IT business, right? It's when you talk to somebody, it's all about what they want. It's not what you want and what your goal is. If you actively listen and address what they're looking for, it's always good for the long-term relationship. So when I met with the broker, just understood what he was doing, what he was coming from, how did he get into the business. It's really just hearing his story, his side of the story, and just acknowledging that everybody had to start somewhere, because typically under 75 deals are marketed by not the brokers who don't have like 10-15 years under their belt, right? So that's so it's really so this is like third or fourth deal for this broker. So it's really just spending like 3-4 hours with him in the conference. Just like I was like wherever he was, I was figuring out a way to just be around him. And because this was actually a 1031, so we sold one of our single family homes in California, and we had to deploy that money. So we had two deals, and so one was this, and other one was a different broker. So I was between these two brokers, like constantly between these two brokers, trying to get more face time from them. And just hear their story out more, and then tell them that, not talk about this particular deal, but tell what I've done in IT, how I built the IT company, and how we took that 83 units with a 60% vacancy, 60% occupancy to 95% occupancy. That was like almost like a reposition deal, that we know how to run these deals. And I've run multiple businesses before, and I actively run multiple businesses. So it's really just gaining the trust that, okay, these guys have business sense, they're business savvy, they're not screwing around. For them, time is more valuable than money. So when they invest time, they're going to close the deal.
Mm-hmm. That's good. So let's talk a little bit more about the kind of offering process again, because I think you mentioned you went through 2 best and final rounds. Is that correct?
Right. Yeah.
Okay.
So the whisper was about 2.6. So we went to 2.6. We didn't even look at the property. my partner just toured the property outside. I live in LA, my partner lives in Dallas. So he toured the property outside because we didn't really have time to get in. So we toured the property outside. The broker said, hey, just give us 2.6, we'll get you into the best and final. So we gave 2.6. There was like 3 or 4 people. So the first best and final, we kind of just figured out a way to get more information from the broker without asking what's the price, right? I mean, it's all, there's always a way to ask questions where you kind of get the answer that you're looking for. So we kind of thought that 2.7, 2.75 was what the price was for that first round. So we offered 2.7, we got into that. And then the final round, because it was a 1031, the broker kind of just showed us, hey, 2.9, you got the deal. So because it was best and final, we said, okay, 2.8, we draw the line, but we give you like 75 grand day one hard. So that showed that we are like serious and we're not screwing around for a property of this size. That was pretty good for day one hard. So that's what kind of helped us.
And what was the amount day one hard?
75.
75,000. Okay. And then hard day one, and how much did you have put down additional for like after the due diligence period?
So the EMD was 175. The total was 175 and 75 goes hard day one.
Okay. All right. So you put the full 175 up on day one, but 75 was hard day one. And then after the due diligence period, the other 100 went hard.
Correct. Yes.
Okay. And how much time did you leave yourself in this offer for due diligence versus trying to close, as far as like, was it a 30-30? And did you have options for extensions, or how did that play out?
Yeah, this was kind of a screwed up thing that we did. So our LOI typically is 30-day due diligence, 30-day close, which is 60-day close, plus one option for either buyer or seller. And then because the lender said, hey, we're not sure because the banks are so backed up, so just leave yourself another 30 days just in case. So we said 60 plus 30 either party extension, and then we said 30-day extension to the buyer. So what happened was the first 60 went through, and then the first extension we actually executed. So it was towards the end of the year. So we wanted to close by end of the year to get depreciation for last year. The contract was not worded properly. I guess there was so much misinterpretation. It said the first extension could be either party. The second extension was only by the buyer. But after we read what it said, the buyer didn't want to close last year for his tax reasons. So when he realized that we were so close to the end of the year, he said, hey, we're going to use the option to extend our 30 days. We said, hold on, you don't have an option to extend the second 30 days. It's only the first one, both of us have option. The second one, only the buyer, and the buyer doesn't want to use that option. They want to close before the end of the year. But then we looked at the contract, it was so vague, it just didn't work. It was not worth fighting over that stuff. We said, fine, just take the option. We'll just close it in Jan. So we closed it in Jan 5th or 6th. Not that we wanted to close in Jan 5th or 6th. We would like to close. We would have liked to close in 90 days. The banks were so backed up that everything was so backed up with the banks.
So I want to talk a little bit about this kind of, you did like basically what you did was a 60-30-30, correct?
Right. Yeah.
So with the initial 60 days, why does it take so long for I'm just looking at it from my perspective, right? And that's the only perspective I have, right? So most of the deals that we do, we're trying to get these deals awarded to us. And so we're tightening up the timelines, and we're buying, $75, $80 million deals, and we're doing them in 21 days, right? We're doing a 21-day due diligence and 30 days to close. And so I'm just curious, like, why does it take 60 days to do that on some of these kind of smaller projects?
So what happened was this was during November. So everybody was trying to get in on the deal in Dallas, right? So the bank appraisers were so backed up. So the appraisal was 7 weeks out. The moment when we signed the loan app and all that stuff, the earliest we could get, this is just a bank recourse loan. This is not even an agency loan. This is a bank recourse loan. When in any day, you should be able to close within 21 days, 30 days. right? So the bank appraiser, the earliest we could get was 7 weeks out. That's when bank said, hey, I mean, before we went into contract, I guess Old Capital saw this was happening, and there was so much delay in the market. That's why they actually asked us to build one more extension just in case if this were to happen.
Yeah. Well, it's a good thing you had it at least because I guess maybe you didn't necessarily need it, but the buyer, the seller wanted it to be able to execute that. So I guess it was good for one side of the party, even though you had to close this year instead of last year.
Right. Yeah.
Well, let's pivot here and talk about from the very beginning when you first heard about this deal. I know I usually ask this question early on, but at what point did you go and physically tour this property?
So after the first bid of 2.6, that's when the Old Capital Conference was. I went in. My partner toured the property just the day before as well. So we kind of had like outside tour and the interiors and a couple of units. And then, so after we gave the first LOIs, when I toured the property, just to show that, okay, all partners have toured the property, they're serious, they're here, even though this guy lives in LA, he came down for this thing, just to tell the seller that, okay, he's serious.
Yeah. Well, and it's great to kind of hear you talk about how you built the relationship with this broker, not by a virtual event, right? Yes, we have had to do virtual the last several years for COVID. Actually, the Multifamily Investor Nation Summit has been virtual ever since the very beginning, right. And it's good to hear you say that I built the relationship with these brokers by meeting them at the conference and being in person. And we actually have a conference coming up ourselves later this month in Charlotte, the MFIN Con, the Multifamily Investor Nation Conference. And so if you have not registered for that, I would highly recommend you checking that out. You can go to mfincon.com and go there and register. And for those of you who are listening, if you want to get a discount, I'll give you a discount code to give you $500 off. So the most we were normally giving is about $200 off, but because you listened to this episode, I'm going to give you $500 off. So if you use the promo code DAN500, so just DAN 500, you can get $500 off your tickets. And we look forward to having you there. And we're going to have a lot of brokers there as well, Malai. So it's going to be a great place for people to be able to network and to be able to, get involved with some of these brokers. Most of these brokers are going to, of course, be from the Southeast, kind of like North Carolina, South Carolina, Georgia, Tennessee, Florida. There's going to be a lot of brokers there that you can be able to build those relationships with and be able to find partners and be able to find investors as well. So great topic to bring up here and be able to mention that about the MFI coming up here in the next couple of weeks. So let's move into due diligence. So what kind of things maybe came up during due diligence when you started to get to that process?
We kind of knew that we had some foundation challenges because the building was a little bit not straight at the top. It was, it was two buildings. One building was a little bit sunk in. So we knew we had some foundation work to be done. The sellers, it looked like they were penny wise and pound foolish. The sellers were actually from LA as well. They live here in LA. So they were managing the property remote. They didn't have anybody there on site. So we know we had foundation issues. We didn't know how big of a deal it was. So in due diligence, we actually underwrote about 50 grand worth of foundation issues. In DD, we found that it was more than 50. It was about 75 is what it'll take, is what the vendor who did the DD said. We said, okay, whatever it is, we'll just have to, figure out a way to get that done, because if that needs to be done, that needs to be done. Too bad that we just didn't underwrite more. So that's the only thing that was a surprise for us in DD.
Yeah. And was that a lender requirement for you to fix the foundation, or you just knew it was something that had to be done?
We just knew that was something that had to be done because there was like 3 inches difference between the highest point and the lowest point. And as you know, in Dallas, soil moves quite a bit. So all of the buildings, or most of the buildings, have some kind of foundation issues. So 1 inch to 2 inches normal, 3 inches kind of not that normal. There is nobody's requirement. We just wanted to fix it. Even though the seller said they fixed it, They kind of just put lipstick on the pig. They didn't really fix the real root cause of it when we did the foundation, is what we found out. Or either that or the vendors that they use for foundation kind of cheated them because they were trying to be like cheap on everything that they did. So that's so we just wanted to fix it. So the next, when we sell the deal, the buyers would not have to think about this.
Yeah, that'll be good. That'll be hopefully be a good value bump for you as well when you go to
Right.
sell it too.
Yeah.
Now, once you found this out with the extra 75,000, I know you underwrote for, I think you said 50 or
50,
30
right.
or 40 or something like that.
50, yeah.
Did you go back to the seller and try to get like a credit at closing or try to retrade the deal, or did you just chalk it up to, oh well, it's an extra 25,000?
So what happened was this is even crazier. So we spoke to the seller. He said, "Hey, you said you did the foundation work. We didn't underwrite any because you didn't want to tell them that we actually underwrote 50 grand. We told them, hey, you told that you did the foundation work. The foundation guy is saying this takes about 75 grand. You know, what do you want us to do? This is not what we expected. Can you give us your foundation guy that we can talk to? Because typically foundation has warranty, right? We're not trying to retrade the deal. We're not trying to get money off of you. If you did the work, which you say you did, give us the foundation guy's number and we'll talk to them for the warranty." So they gave the foundation guy's number. I don't think they should have given us the number, but they gave the number. So when we spoke to the foundation guy, man, he was going on and on about the seller. Apparently, he did the work and seller didn't pay them. He did half the work and seller didn't pay at all. And then we got him. We actually broker, the foundation guy, and my partner from Dallas. All three went and looked at the property again with the broker. So we're not like making stuff up. So the broker knows that we're not just trying to retrade, because we're trying to get into, break into DFW market. The last thing that we want is to retrade for the stupid thing for, just to cost this name for us. So we took the broker with the foundation. I mean, no, it's not us. It's the broker who said, hey, let me take the foundation guy and Mahesh, who's my partner, to the deal. And he showed all of the work that was done, and apparently not a lot that was done. And he said this would take another 100 grand easy to fix this.
So he was saving even 25,000 more on top of what he had already done.
And then what happened was there is absolutely no warranty because everything was done in cash. And so he paid $30,000 to the guy who did the work in cash, in PayPal and cash. I mean, this is crazy, right? I mean, I don't know, check, whatever it is, right? But there is no warranty because it was all done cash. But we could see that there was work done because we could see that there is holes and there is concrete filling. But so the foundation guy said, well, we started, but he gave the money. We did work, whatever he did, whatever the money was there. And then when the money ran out, he didn't give us money. So we just stopped. So that's it. So and then the broker was able to talk to the seller, and the seller said, okay, we'll give you $20,000 credit and that's it. We're not going to give you any more. We said, fine, we'll take the $20,000 credit. So that's what happened. So the broker kind of negotiated the deal for us in between.
Did the lender balk at all at the credit closing? Because I know a lot of times that happens when the lenders are like, nope, you can't do credits at closing.
Right. So we were kind of worried because we thought, okay, you know what, this is going to come up from out of pocket. But the lender, because it's a bank loan, they don't really care that much. They said, fine, you just take the credit, and we just use that credit, and we just so the credit was against the sales price, which is even better. But at the end of the day, we did do the work, and it came out. Actually, it did come out to about 45,000. The final price was about 45,000 because we spoke to few people and we actually really did the work what was necessary to be done, because these guys were going in from outside in where the real issue was inside out, because they were using all cash guys and the guys who were doing this on the side and without pulling the permit and all that nonsense, because this is such a big job that you have to pull the permit with the city. And if you do it during the workday, you have to pull the permit. So these guys would do it during the evening, the sellers guys. So we hired legit company. They pulled the permit and they did the work from inside out. So it was about 48,000 was the final price.
Okay, well, that's not bad. Kind of a little bit under what you had underwritten for from the very beginning. So that's good.
Right. Yeah.
So speaking of the loan, let's move into the financing piece of this deal. Walk us through kind of what you were able to put together from a finance perspective.
So initially, this was going to be, bridge to agencies. What we thought, we just hold it because this is actually a personal portfolio. We'd hold it. So Old Capital said, okay, we'll just get you like a 2-year deal, IO for 2 years, and then we'll just go from there. Um, that's what we signed up for. It was 4.25% interest only for 2 years. So when we got closer to the loan, Old Capital was actually pretty active in negotiating. After we agreed to this, they actually got us 2+1, the 30-year extension for the same price, full IO for a half a point.
So it was a 2+1, so a 3-year,
2+1, 3 years, yes. And we didn't even realize it was going to be 3 years because we agreed for 2 years IO. Old Capital was nice enough to not, after we agreed, they just didn't stop. They were still negotiating to get us better terms, and they got us 2+1 for a half a point.
Mm-hmm. So, and that's a half a point extension for the extra 1 year, correct? Yeah. Right. Okay. Yeah. And then what was the loan to value on this one?
It was about 80%, if I'm not mistaken. 75% loan to cost.
Loan to cost. Okay.
Loan to cost, yeah. Because they did finance the rehab, 95% of all the rehab.
Okay. And what was the decision for doing this kind of bridge to perm? Was it because the occupancy was low, or was it because of renovations, or what was kind of the plan here?
In November, December, or October, November timeframe, all the loans or most of the loans were bridge for the leverage. That's number one. And number two, the rents were like really low. We couldn't have gotten agency with this. I mean, we could have tried SBL, but then the leverage would have been so low. Because when we took over, the rents were $815 for single bed and $1150 for townhomes. So it was not an agency at that time. Because of what was going on. And also when we had to do the foundation, we had to vacate about 10 to 15 units out. So that's a major chunk of people to be gone from the units. So we couldn't have survived 1.25 service for the agency.
Yeah, they would have had such a low leverage. You got to bring in a lot more capital to the table, I'm sure.
Yeah.
Which would have hurt the returns quite a bit.
Right.
Walk us through what the business plan is on this property. I know you mentioned kind of some lower rents and some renovations, but obviously outside of doing foundation work, was there maybe some exterior cosmetic things or amenity things that you were going to do? And then what was the plan from an interior perspective?
So what we found out was when we started out, this was more like a management play. We'll improve the efficiency and run it lean is what we got into. Because the sellers are from California. The way they were running the property is one of the units, manager was renting it and she was paying half the rent. And another unit, a maintenance guy was renting it and he was paying half the rent. And what we found out was the maintenance guy, because these guys were not paying all of these guys properly, or, that's their pay. You pay half the rent and you take care of all the maintenance work. You pay me half the rent and you take care of management stuff, right? That's not enough for these guys to live off of. So what they were doing was they were charging. So if they fix a toilet leak with the tenants, they were charging the tenants. This was crazy. I mean, I don't know if it's legal, but this is crazy nonsense. Nothing was in the books, right? They would just get, hey, it's like tips, right? So they would expect tips. So we said, okay, we can just run it efficiently and run it more professionally and show the tenants that we are putting in some money into the deal. So as soon as we took over, we did the foundation work, and now we're renovating 10 units. We renovated 2 townhomes already. So when we took over, the rents were $815 and $1150. We underwrote for $850 and $1,100 is what our underwriting was without renovation. We renovated 2 of the townhomes. We're getting $1,350, which is a lot more than what we underwrote for. Because we completely redid those 2 units, and they could see value in that, because it's not just like junk old stuff. And when they call in for work, we tend to it. And then the funny thing is when we took over and when the tenants knew that the work was getting done, all of a sudden we were slammed with so much work order because they didn't want to pay, so they were not reporting. And this is all bills paid, so the AC was not working. They didn't care. So now that they're reporting and we're kind of taking care of them, so that's that. And then we're building like a pergola and like a nice picnic area for the tenants to enjoy, and we're painting the entire building. So the property manager always says that, hey, you have to put in the work. The tenants have to be proud to live in here for us to get the premium that we want them to pay.
Mm-hmm.
So we're
And,
we're actually putting in the money.
yeah. So what was the overall CapEx like per unit on the interior?
So we budgeted about 7,000 per unit, and we did two
How much was
units,
that again?
7,000 per unit.
7,000. Okay. I thought you
Yeah,
said 30,000 at
no,
first. I
no,
was like, holy cow, that's
no,
a really expensive interior, but 7,000. Okay. That makes sense.
So we underwrote 7,000, right? But then for the two units that we did, one unit was almost there, so we spent about 3,000 or so. The other unit we spent about 14,000. So we were kind of like, I was worried, and if we had to spend 14,000, I don't know if we're gonna make it. It's just not gonna work. But these two averaged out to what we came out to be, so that was fine. So we just need to, because the prices have gone up quite a bit and the
Mhm.
laborers, there is shortage and all that stuff. I don't know if 7,000 is going to be enough, but that's what we underwrote. The property manager thinks we should be around 8,000 ish is what she thinks. 8,000 to 9,000 is what she thinks it'll take.
So buying it for 82,000 a unit, approximately a little bit more than that, but right around 82,000 a unit, adding $7,000 a unit, let's just call it 8,000 as an extra buffer. We're now at 90,000 per unit per unit of these 34 units. What's the projection of where you think you can sell this and at what time frame?
Yeah. So what happened? So we underwrote it for 815 and 1150, because when we underwrote, we said, okay, we'll just take it to whatever they are proven max to be. And our exit was 5 years is what we were thinking. I mean, we'd hold it if it makes sense, because there is no like demand for us to exit it. We'd refinance, and if because it was a 3-year loan, if we could refinance, pull most of the equity out, we just hold it as long as we can. And if there is no major issues, because it's a 1967 product, this is not a new product, so plumbing issues are always going to be there. If we can see that there is light at the end of the tunnel and we don't have to sell it, we will not sell it if we can pull most of the cash out.
Okay. All
Um,
right.
but in Jan, like similar units were trading for 105 to 110 in that area.
Okay. So let's just call it 105 a door, 34 units, 3.75 million, right? Okay.
Right. Yeah.
All right, good. And then you mentioned property management. Talk to me about what you're doing for property management, because it sounded to me like the seller really didn't have a good handle on or a good process in place for the property management with some of the on-site people that were semi or quasi on-site because they live on the property.
Right. So property management was the challenge because, as you know, anytime you touch anything less than 70, 80 units, it's just a mess to deal with this because there's absolutely no efficiency. It's as good as dealing with like a bunch of single family homes because you don't have anybody there. You're running these things remote. If you're lucky, you might get 1 or 2 days of on site and stuff like that. So our goal was when we acquired this property, we were going to buy like another unit closer to this, and then we can run both together. So that was the plan. So the property, so we told our plan to the property manager, and so we're paying 6% property management, which is kind of crazy for this kind of unit. But it's the expenses are kind of high for this because it's 6%, and we don't have anybody on site. We have like 1 day of maintenance guys payroll, and we have 2 days of leasing agents payroll. And then anything more than that, we would be billed at contractor rate, because we would get outside contractors. So the expenses are kind of high, but we are an LOI in a deal close to this. It's about 70 units, and that's also our personal property. So the thought process is once we close that, we'd be having two maintenance guy and one leasing agent managing these two units.
So let's talk about the structure of this deal with investors. I think I heard you mentioned early on it's more of a kind of personal portfolio project. Did you bring any outside investors on? Was it primarily just from the personal 1031s you brought in to be able to acquire this one?
So it's me and my friend. I've known my friend from 11th grade. He's the only guy that I would trust my life with. I've known him since 11th grade. So he lives in Dallas. He's the boots on the ground. So it's just him and I on this deal. So it's just us.
Okay. So no worry about investors or having to raise the capital or anything like that. I think you did mention there was on your side, at least there was a 1031 that kind of came in as a tick alongside your friend to be able to acquire this. Is that correct?
Right. Yeah. So it's actually a three-party take or two-party take. It's the company between me and my friend, and then this 1031, because the long-term plan was I still have like five more houses in California that I would want to sell and use that for the next exchange. So we didn't know how all these 1031s work because we have always heard horror stories about 1031 that the timing is not, people make it as people make it sound easy, but it's never easy. The guys who have done 1031 always swear by you never do 1031. That's something that you should never do. Even though you pay taxes, you should pay taxes and all that stuff. So we wanted to do a dry run as well. So that's why we sold one home and used that for this. And my friend and I put the extra money.
Yeah, I would say 1031 and the tick structures are very common and they're actually not that hard to do. They're complex because there's a lot of moving parts to it, but as long as you have a good, qualified intermediary and you have a good, legal team in place that could do all the paperwork and the processing, it's really all it is paperwork. I mean, last year we did a little over like 48 to 49 million worth of 1031 exchanges into some of our properties. And then this year alone, we've already done another like 39, 40 million as well. So it's not something that's that hard. I know some people just don't like the hassle of them, which, it is what it is. But for the most part, they can be very, very beneficial to lots of investors. So kudos to you for executing that on this particular project.
No, so this one was a little bit tougher because it's 45 days and all that stuff. It's just when you are trying to do everything on your own, it kind of gets a little tricky with the timeline. So that's where the challenge was. And then when we sold these five homes, I guess my first option was we'll try to buy it on our own and try to run it. I think I met you in December or Jan when you were in LA. So when I was talking to you about investing with you with that 1031 proceeds, so that was the plan. If these things don't work out, the plan was to, because you churn out deals like one or two a month. So that's always in the back of my mind that if my 1031 doesn't work, you would always be there to figure out a way to get me
a good backup. You can't do one on your own. That's good. Well, as we're wrapping it up here, is there anything that we haven't discussed yet on this particular acquisition that might be interesting for us to talk about, or have we pretty much covered most of it?
I think we've pretty much covered most of it. I think it's just that it was kind of hard to see what we were not. It's kind of hard to see the unknowns when we looked at the deal first, and then the more we unwrap, the layers of onions, it became more evident that we have a gold mine here. We can actually hit a home run. This would totally work. So when we were able to raise rents from 1150 to 1350 with just two turns, we thought, man, this really, the market can take this. If you show that you are not greedy and just not wanting money from the tenants, and if you are investing into the deal, they would totally invest or pay more rent.
Yeah. I got two final questions for you. I think I kind of know the answers to these, but I'm going to ask them anyway. I ask them to every guest. First off, what did you find that was easier during this entire process of this acquisition that originally you thought was going to be a little bit more challenging?
First, it's just getting the deal. Honestly, it's just because it was so competitive in DFW market. I thought, man, because we had given so many LOIs because nobody takes us seriously. Because even though we have funds to back up, we have done a deal in New Mexico. We're near to DFW area. Even though I've told them, dude, I actively run multiple businesses. This is not my first rodeo. I have business sense. We have money. We have done apartments. We just have not done in DFW market. The thing is, the brokers always go to their favorites first, and if they all fall out, is when they come back to the other guys who are just there. So whenever we get the deal, it is always chewed out by everybody else, and nobody wants the deal.
Mm-hmm.
So we never thought, man, we'd never break into DFW market unless we horrendously overpay uh, to the market. That's the only way to get a deal. And we didn't want to do that. We want to be cognizant and prudent, about the money that we are actually buying into.
Yeah. And the last question is the opposite of that, kind of contrasting question. What did you find that was harder that originally you thought might have been a little bit more easy?
So we had this amazing plan, because what happens is, in the other deal in New Mexico, we had a full-time staff. We had two maintenance guys and one leasing agent. So when we gave them a plan, we say, hey, turn these 3 units, they'll turn it. Turn these 10 units, they'll turn it. So we didn't think, we don't have that kind of leverage with these guys. So we had this plan. We're like, okay, this month we're going to turn 6. Next month we're going to turn 8. We're like 4 months into it. We have turned only 2 units, and we're like in the process of turning 10 units. So the plan completely went out the window. It's taking a lot longer because you don't have control of people's time, because they don't work for us full time. So
that can definitely be a challenge. Yeah. Well, and I think it's also challenging too, because obviously you have one of your partners that's kind of local to the Dallas market, but you're in LA, so you can only do as much as your partner and your friend can do there. That's got the boots on the ground. So right. I know it's kind of a team effort, if you will, to try to get all these different units renovated and the timeline set and the residents put in added in there and everything like that.
Right. Yeah. I mean, it was, but it's a good problem to have, because we kind of realized that, okay, these are the units that we probably should not get into going forward, because smaller units are easy to, I guess it's not easy to manage, unless, I mean, it's easy to manage if you throw a bunch of money into it and if you don't care for the returns. But if you try to be efficient and run
which is nobody.
Right. I mean, if we try to operate it efficiently and as thin as possible, it's hard. You need full-time staff.
Yeah. I totally agree, 100%. Well, Malai, I want to thank you so much for being here with us here on this podcast episode. It's been great. Learned quite a bit here. How can the listeners reach out to you if they have further questions for you about this acquisition or want to continue to follow you more?
Absolutely. So Pecos Capital, PECOS, pecoscapital.com is our website. Pecos, that's the river that runs from New Mexico to Dallas. So we have properties in Albuquerque and Dallas, and that's how we came up with the name Pecos. So pecoscapital.com, and my name is Malai, Annamalai. My contact is there as well. And my phone number is there on the screen, but it's all in pecoscapital.com.
Awesome. Well, I'm looking forward to continuing to follow you as you continue to close more deals, and looking forward to having you on a future episode as you continue to close those deals into the future. And for those of you who are listening here, don't forget to go to mfincon.com to register for your ticket coming up for the Multifamily Investor Nation Conference coming up in Charlotte in just a few weeks. It's going to be June 23rd, 4th, and 5th. We have Shaquille O'Neal, Barbara Corcoran, and Jocko Willink, as well as 60 plus other and multifamily investors that are going to be there speaking at this event. So looking forward to having you there. Don't forget to use promo code DAN500 to get your $500 off your tickets there. So again, thank you so much, Malai, for being here. And I hope you have a good rest of your day. Okay.
Thank you, Dan. Appreciate it. Thanks for having me. Bye.
Thank you.